Joseph has worked with us diligently for a very long time now here at MetaStock and has created this software that works alongside of MetaStock in actually helping you mitigate and manage your risk and manage your trades. That way, once you identify possible trade opportunities within MetaStock, you then place your trade and you become a trade manager. And what we want to do at that point is make sure that we have not just the tools to be able to get in and out of trades, but also understand the methodology and have the correct tools to be able to go out there and manage that trade efficiently later on down the road. Now, what I'll do here is without further ado, I'll actually turn the time over to Joseph, and I will still be here. If you guys have any questions, feel free to throw them in the chat box, and I will go ahead and turn the time over.
Can you see my screen?
Yes, we can. Mm-hmm.
Okay, so it's money risk and trade management. That's the screen showing at the moment?
Correct, yes.
Fantastic. Look, I'd like to welcome everyone and thank you so much, Hunter, for your kind words. We'll try to get through this as trouble-free as we can. And without any further ado, we'll just get started, I think. Now, one of the things that, there's an ugly fella for the morning. We've already covered the disclaimer. It's basically a repeat, so we'll just move on from there. Now, one of the questions I'm asking is, how often do you need to be right to be successful in the market? Is it 70%, 80%, 90%? Many will actually be surprised that some of the best traders in the world only get about 50% of their trades right. The reason why they're successful is that once they open up their trade, as soon as the evidence is clear that they've made a mistake, they get out first opportunity. And on the other hand, when the share is going their way, or the price is going their way, they'll actually stay in there until the evidence shows that it has changed. That will be via a profit stop when in profit, or initial stop loss when not. There are three more questions you should ask though. One is, when you're right, how much on average do you make? What percentage of times do you lose or break even? And how much on average do you lose when wrong? Successful traders control their risk and only follow rules that give them a positive trade expectancy. Trade expectancy is not talked about much, but certainly vital. How to calculate it is, I suppose you need to set up another spreadsheet with all your trades. You'll need to know what the average winning trades percentage by the average dollar win. You subtract the average losing trade percentage by the average loss. Just to make that clear, can you make money from a trading plan that's only 40% right? Here's an example. This particular portfolio has a 40% right. On an average, it makes about $1,800 when it does. You subtract the $600 on average that he loses on each trade, and you get a figure. Yes, it is a positive trade expectancy of 360. Once again, this is something you can set up on a separate spreadsheet if that's what you wish to do. But it's important. It's more important than knowing when you're right or wrong. It's amazing how many people talk about their winning trades, but not their losing trades. Now, the basic components, which I'm sure everyone's heard before, of a trading plan is one, what to buy and when. Now, I'm certainly not going to cover that today. There's certainly thousands of different people doing that around the globe, and I'm sure MetaStock will do that very well for you. How many shares to trade, and your initial stop loss and your trailing profit stops. The last two generally regarded as risk management, and how many shares to trade regarded as money management. So the second, how many shares to trade? Money management, known as position sizing, or how many shares to trade, will control your overall dollar profit or loss, risk if you like. Now, it's the single most important strategy of any trading system or plan. Risk management does not answer the question, how many? For example, you buy back a stock at, you buy a stock at $10, you have a stop loss at 9. What is your risk? $1 per share, but what is your total dollar value at risk? Here is an example. Here's the formula for producing your position size. It's your account size or core trading capital. What I mean by core, I'll explain a little bit later on, multiplied by your maximum percentage risk, multiply minus the brokerage both ways, or divided by your buy price minus stop loss. Once again, you can set up another spreadsheet for that if you wish, and I'm sure some people do. Here, for example, we have $25,000 multiplied by 2%, giving you $500. Less your brokerage, let's say it's $10 each way, so that'll be a balance of 480 divided by dollar, 180 shares. Does everyone see that? Are you getting all this? This is new to me.
Yes, we can see it.
Okay. All right, so one of the things I should point out is that risk management or stop loss and profit stops are vital to trading success, but position sizing is the missing key to successful risk management. Now, what I mean by core trading capital is, sure, if you've only got one trade out there at a time, that's fine, but if you've got 4 or 5, what I mean by core trading capital is your available cash plus or minus your profit or loss if all your exits were hit. You may be up $1,000 on one trade, but if your stop loss is set at $800, for example, profit, a loss, sorry, well, that is your core, or your realized profit, if you like. Maximum percentage risk. What this is more, it's something that you'll feel comfortable with if you could see it. And what I've incorporated in the program is a little risk tolerance calculator, if you like. What I've done here is I've started with 25,000. I've put in there that if I have a maximum risk of 2%, I want to compare that if I had a maximum risk of 4%, with a brokerage of 1995 here it is in Australia. So as you can see here, with 10 losses in a row, and hopefully that won't happen, but with 10 losses in a row, you've actually lost 18.29%, and it will take you 22.4% to recover, if you can handle that. On the other hand, having a maximum risk percentage of 4, for example, after 10 losing trades, you've lost 33.52%. It'll take more than 50% to recover that money. So how would your portfolio perform with a percentage win each day, month or year? What I've also included is a growth. So just suppose you had a growth of 2% compared to a growth of 4%. These values here on the left after can be days, weeks, months. Let's assume they are months. So with a 2% growth, you'll see here after 12 months, you've made 26.82%. That's only with a 2% growth each month. On the other hand, if you can make 4%, you're looking at 60.1%. So as you can see, you don't need to be, you don't need to be making large sums of profits to make a very good income from trading. So let's move on. We've got our initial stop loss. This is your initial stop loss exit price, so we can close the position first opportunity when it is hit. It can be a volatility based, technically based, or percentage based. It will limit your losses. Once again, a trailing profit stop. This is your exit price when in profit. I consider that to be when you're above break-even point. It can also be volatility, technical, or percentage based, and used correctly will protect your profits. For your consideration, I hope everyone enjoyed that. The last 4 years, I suppose I've been semi-retired, and most of my time has now been concentrating on the program itself, and that's one of the results. I hope you enjoyed that, as well as a lot of overseas travel, which I've been enjoying also. But moving right along, let me try to demonstrate how simple and quickly using the JBL Risk Manager can be for you. Here's a sample trade. As you can see here, I decided on the 30th of the 9th to actually purchase BHP if and when it broke the 2201 figure. It's a blue chip stock, what I consider a blue chip stock here in Australia. I'm going to assume a $25,000 initial trading capital with a brokerage each way of $19.95. So let me show you how I set that up. Just simply start the program up. For those that downloaded the trial version, it will only be 30 days unfortunately. You'll see here the trial registration number in the bottom left hand corner. All you do is right click on that and click on copy, and then paste that into where required. Let's continue. Try. Everything seems to be going well all right at the moment. Come on, where is it? Bear with me just for one moment, please. Oh, I thought it was running too well. Let me just get this working correctly. Haven't done it via PowerPoint before. 1 moment. Can everyone see that now? Can you see that, Hunter?
Yep, we can see that.
Okay. I'm sorry for the delay. Let me just start off again. All right, so the first thing we need to do once we've got our program opened up is we're going to create a portfolio. You can set up one or as many as you wish. The first thing we do is click on this little box here. It says create new live portfolio. What we're going to do is just call it the MS demo and create. Next thing is the settings. Now we said we're going to, the program does try to help you by highlighting certain areas that you need. Let's look at what market we're going to concentrate on. In this particular case, it's going to be Australia. And as you can see, that currency symbol will reflect that. If we're looking at London, for example, you'll see they'll change to pounds and it'll be equivalent to all the other different areas. So going back to Australia, sorry for waffling on. We did say that there was a long-term trade, and the way I differentiate that is basically blue chip stocks. You don't want them to move very far or very volatile. So I've moved that, but generally leave it on the medium-term default seems to work best. I use a 10-day exponential moving average applied to a average true range, and depending on the period will determine the period of the ATR. As a profit trailing stock. Trade sizing, I generally go a maximum of 20% of my total capital. Sorry, 19%, leave me 1% after 5 trades. So I'll just change up to 20 just to make it easier. And we did say the brokerage is going to be $19.95. Generally what I could have done now is I've got to select my data source. I could just add directory, see trading data, stocks, ASX, equities, and there it is. But in this particular case, I haven't got it up to date. I'll just use my free internet price data updates, which I've been able to negotiate with several different suppliers around the country, around the planet, and I hope you enjoy using that. So we'll just hit save settings. We need to give the portfolio some capital. It will assume it's starting capital initially, so we just put in 25,000. And what we start is a new trade. It was BHP, so click on select, type in BHP, enter. Come on. That's why having your MetaStock local data is so helpful. Click on it, hit OK, and also give it a sector. And you'll find that why that's there later on. Now we select the date. We did say the 30th of the 9th, so we just go back last year. And we did say we're going to buy it at 22.01. And that's suggesting 226 shares. So as you can see from the screen so far, your maximum risk of 2% was set. Your maximum risk will be 500. Risk per share. As you can see, the total value spent, it's all there. Just hit save trade. Then you come back each day and just wait until you hit an exit. And what we did was we got an exit here on the 15th of October. So you just click on there, 15th of October. And we sold at 25.10. Hooray. It is developer's privilege to have some animation. After looking at software every day, and after all these years, it just puts a little bit of interest. And we hit save trade. So we exit on the 15th to 10th. This system will also work just as easily with short trades. Just click short. There. Okay. Now we said on the 15th of October, and we bought at the open of 25.10. Suggesting 203 shares. And once again, all we do is just come back, quickly have a look at the screen, and if there's a exit, you exit. And we're holding on to this stock, and we're still holding on to it each day until we get an exit. If you got an exit that night, you would sell the following morning. And we're selling at 17.10 on the 17th of the 12th. And we sold at 17.10. Save trade. Now, once what we can also do is compare the performance of our portfolio against an index, for example. In Australia, we've got what we call the XJO. All you need to do is put in your equipment, just by clicking on the button that says compare. type in XJO. There it is there, the S&P ASX 200. And what this will do, it will look at your first, order, which is done on the 30th of 9th. And since that, the 30th of 9th, the XJO has gone up 1.87% compared to your portfolio of 7.42. What we'll do is one more example, and then we'll open up for any questions. So this time we'll go along. BHP. And went short and closed the position on the 7th of the 12th. So we'll open this up on the 17th of the 12th. And at the open at 17.10. You'll notice that when I talk about opening and closing a position, if you've got rules and they've been tested, which you can test very well with this program, if your rules demand that you exit or buy first opportunity, buy at market at open, you will find it works particularly well when closing the position, where the mums and dads tend to think that they've hit bottom and they tend to increase the price at open before it continues its merry way down. So all I'm suggesting is, if you've got a set of rules determined you've got to get out the entire position at first opportunity, and that's at market at open. That's just my opinion anyway. All right, so we've got a long trade here. We look for a exit, which we got on the 7th of January. 7th of January, okay, and open of 1673. Now, as you can see, there's sometimes you'll win, sometimes you'll lose. Next trade, don't make it personal. You can't win them all. I remember many years ago, that was a major problem most traders, and that was that I tried to explain to them that the best traders on the globe generally only get about 50% of their trades right. So next time they place a trade, assume that they've made a mistake, because the chances are they probably have. And hopefully they'll make it a little bit easier to close that position. And as you can see there, that is our result so far. How we go for time, Hunter?
We're doing fine.
No one's fallen asleep or anything?
I'm awake.
Okay.
So we even have a question already. I don't know if you can see the questions there. Anne is asking, how do you calculate the first stop percentage?
Okay. In your settings, you'll find that these refer to profit stops and your money management rules. You'll see that you can actually change these figures to 1.95 if you like, or whatever. But I suggest testing the program out with the defaults. But there it says, based on the amount of capital you currently own, is what your maximum risk. So if you've got over 150,000, for example, you may not be comfortable risking 2%. You may prefer to risk 1%. Now, based on that figure and your trade sizing, it'll automatically calculate that stop for you. Now, if you wish to override it, you can do so. Let's do an example. One second. I've written some articles on what they call stop gunning or stop running, which is basically, I prefer to use, a lot of people like using a technical stop, which is a stop just below the recent low. But sometimes that could put you more at risk or less. But let me give you an example. Let's suppose I'm going to buy this stock tomorrow, which is the 1st of April. No joke. And it's suggesting a stop of 1507 and buying 325 shares. Now, if we were to lower that stop to $15, for example, or let's just say, let's make it $14. What that means is you're exposing yourself to a lot more risk, which means you'll have to purchase the shares just to maintain your maximum risk. And here, example, by altering the preferred stock, there's only it's suggesting only 192 shares. On the other hand, if you prefer to raise your stop, let's say to 1550, what it means is you've lowered your risk, but you've also set aside a maximum trade size. In this particular case, if you were to get the 449, it will be a total of $7,482, which exceeds your 5,432, which is preset. So you'll need to lower that figure to the appropriate. I hope that, does that make sense? Did I waffle on too much?
That makes sense to me. And if you have an additional question on top of that, definitely type it in there. I hope that helps a little bit.
There was one other thing. I've also included with this a risk to reward calculator. In other words, let's suppose that you're happy with the preferred, you prefer to use your initial stop. You can also use a profit target, let's say, of 18, and they'll give you a risk-to-reward ratio as well. Once you've obviously opened a few trades, so let's just do that for you. $308. That's 0.421. One of the things I showed you earlier was the risk tolerance calculator. You'll find those just by going to settings, display RTC. And there's also the compound growth. I've included a little Fibonacci calculator for those that are interested in it. You'll find also that in each trade, I've also included power pivot points. This is more for those that are interested in the daily bias. That's automatically calculated each day for you. And as you can see from the results from those 3 or 4 trades, we've got a summary of win-loss ratios, average win-losses, great trade expectancies, average days held, and then they're broken up into long and short trades. You've got your average expectancy of R, you've got your prices. At the moment, for long trades, my trade expectancy is $250 a trade. My short trades are 1,664. Van Farb talks about, with his kind permission, he's given me permission using system quality number, and he talks about at least 30 to 40 trades before you get a more accurate idea of how you're performing. Portfolio performance is up 7.87%, which is only up 6% compared to the XJO, the top S&P ASX 200. I don't know, I encourage people to trial the product for themselves. There is a user guide there just by clicking on this button here. I'll try to make it as detailed and as comprehensive as I can. Over 15, 20 years now, I've found that unless you do try to keep it simple to follow, they generally don't use it. So as I said, I'll try to list it all for you in that user guide if you have any questions. Any more queries? Something you'd like to see, haven't seen yet?
Yeah, and while you guys are typing your questions, I did want to add in as far as my experience has been concerned, and really all top traders on average will tell you that finding winning trades is very, very important. But the most important part, and the thing that's really going to make you money in this industry, is having the ability to manage those trades, manage your money that's fueling those trades. And finding these trade opportunities, obviously that's what MetaStock is for, and finding the systems to trade with, and doing your back testing, etc. But from a money management standpoint, I haven't really seen anything else out there that is this extensive and this in depth, to where you can have the ability to manage all of your funds, each and every single trade, and look back and see exactly how you've been doing, and whether or not you should change up your trade philosophy. Wanted to cover a couple of options that you have here as far as the Risk Manager itself. You can get a free trial of JBL Risk Manager off of our website, and I'll share with you the link for that here in just a moment. Or if you wanted to give us a call or shoot us an email in, we could set you up with a one-time purchase of JBL Risk Manager for $299. Now, here is the actual link for the add-on. If you just go to metastock.com, you click on products, you click on add-ons, and the JBL add-on will be there. Also, you can get a free trial of MetaStock if you don't have MetaStock from metastock.com/JBLT. If you have any additional questions, feel free to give us a call. We would love to answer them. We're also here available in sales chat for quite a while. This webinar will be recorded, so if you want to go back and watch it, more than happy to send that out to you. Like I said, please let us know if you have any questions. We want to thank Joseph again, who sounds like he's having some technical difficulties, but we want to thank him again for doing this presentation for us and showing us a little bit more about the JBL Risk Manager. Like I said, if you have any questions, let us know. Otherwise, happy trading.